And
Hello? Hello, good day everyone. How are you? We are here live on Wednesday, October 25. 25th, excuse me. October 25, 2023. Um, we will be discussing a nice topic today. It will help a few of you guys who are into trading. It will help some of you guys to shortcut some of the things that will allow you to become better traders. Um, so we'll give you a quick feedback on that for a moment. We'll fix something. Okay. Currently, while we're waiting for other other guests, other
viewers. Feel free to chat, say anything that you guys wish. Um, if you found something new, or if you found something interesting, or if you found an opportunity that's right there in the market currently, feel free to share to the community. So we're waiting for a few more people. Oh, Anyway, our topic for today will be an interesting one. It's so one of the sites that I frequent, which is Baby Pips, has recently, well, not recently, they conducted an interview for some of their top traders, some of their most experienced, some of their most from their best traders, and they compiled the top 10 tips for that each and an individual trader gave for you guys. So for those who are relatively new or are still willing or wanting to learn from what are the best people, what are the best traders doing, what are the most experienced, what the most profitable traders are doing that I am not doing. Stay tuned because you will learn a lot with this session. So let's give the other guys a couple more minutes and we'll start soon. Looking into the topic since I was preparing this for you guys, you'll be surprised how majority of the tips that the most experienced traders share are very fundamentalistic. So it's you'll see later. We'll get into a discussion on it later, but you'll see that some of the top 10 their suggestion for to becoming more profitable in the long run is actually simple in the sense that you can easily adapt it even if you're a new trader in the market. But I wouldn't say it's easy because you'll be fighting against human nature in that sense. So hello Robbie, hello Bill. Oh, hello. How are you guys? Hope you're enjoying this afternoon as much as we are. So I guess without further ado, we can start. So like I said, these are the top 10 picks from the top traders, from the best traders, most experienced and most profitable traders from this community. So the first tip that came from a trader is number 1. You'd be surprised. Don't give up. Right. He says, I have several pieces of fairly good advice. But if I can choose only one, this would be it. Learning to trade is not a sprint, it's a multi-year marathon. Don't give up. So, like I said earlier, the tips that you will be hearing from me today are not exactly new ideas, but they are effective ideas. So a lot of new traders have this thinking that trading is gonna be easy, that trading can be easy way to get money because of all of the advertisements, all of the hype involving around trading, that people make so much money, especially with those from the Instagrams and the whatever social media. They hype up trading and they show you their Lamborghinis and their Porsches, their Ferraris, and their condominiums living in Dubai and all of that. Yes, the potential is there, but you do not see how long it took them for them to reach that point, or if they were even true, even still, right? Because you might know they might just have hired somebody to borrow that car. You don't even know if it's theirs. So yes, the potential for trading in the market allows for that much money and that much earnings, but you have to understand that along with the wins comes with the losses in the market. So maybe that's why the number one tip that this specific trader gave us is not giving up on the market, because yes, sometimes losing money is hard, but if as long as you stick to it and thinking of it in a long-term point of view, you will always have a lot more money in the long run. As long as again you keep on learning, keep on evolving, keep on improving yourself as a trader. There's a lot of things that happens during a trade that you have to make yourself adapt to, and that you have to understand. Like for example, you'll be surprised that there's a market volatility factor. There's um, the fundamental factor that sometimes technically all of the positions that you fixed was correct, but then there's a fundamental data that shifted the market one way before actually going in the direction that you wanted it to, making it hit the market uh, upward of your stop loss. So there are situations in the market that will not be uh, that will not be suitable for all occasions for you, but you have to understand that just part of the business in the market, and um, fighting through it is just part of the experience that we have in the market. So that's the first tip. Second tip, we have, if you guys have any reactions to the first tip or any of the upcoming tips, just feel free to share or ask anything, because we are open for discussion. Because I'm interested in your guys' thoughts. Are the tips that are being given too basic for you? Are they too esoteric? I don't know. Feel free to ask. Yes. Oh, are you feeling better from your wound? Thank you, Robin. Still a bit down, but like the market, you should not allow your sickness to become the better of you. So you just keep fighting. All right. Tip number 2 is, according to this trader, is go for consistency. So he says, I would urge newbies to learn the power of compounding modest but consistent daily profits, then letting those profits grow exponentially to build wealth. There are 3 elements here. Modest profits, don't take huge risks swinging for the fences. Consistent profits, this means accurately following a trading method that has a high win ratio. And 3, compound profits, let your profits accumulate in your account, and as your account grows, increase the size of your trades in proportion to your account size. All right. So there are 3 elements for this specific tip. From I didn't get for which trader gave this to. So number 2, go for consistency. Early on in most of our trading journey, or most of our trading careers, we have a tendency to just look at the market, try to time the market, or try to evaluate the market based on gut instincts or based on whatever data or whatever economic data that will show up. We try to time it the market that way. But having a consistent plan for having a consistent system for yourself will help you to become more profitable in the long run. So now this trader is actually advising against huge swings in the market, because basically if you go for huge swings in the market, you're also opening yourself up for huge losses. And that is something that we do not advise unless you are number 1, emotionally able to handle it. Number 2, financially able to handle it. And number 3, make sure that even if you lose that much money, you know what you are doing and you know why you will lose that amount in the first place. So it's not because losing money in the market is basically guaranteed. Like, I'll show you guys something. Yes. Look at this. Right? So for the longest time, GBP has been trending at a certain point, and then it drops. You would think that at this point, the GBP would continue dropping, right? But then it suddenly went up. So if you're the type of person who just follows trends or who just follows the movement of the market, this might have been a big loss for you. But if you already had a consistent plan or had a trading consistent strategy in mind, even if you lost money with this specific trade, which honestly I did earlier, but if you had a system, you would understand why, or you would be in a better position tomorrow as a trader in compared to before. But like I said, this specific idea is more about uh, yourself and where you are as a trader. So for those who are new, smaller profits is better. Getting a system that works for you is better, and making eventually you will find a system that works 60% of the time, 70% of the time. By the way, no system will work 100% of the time. So just getting a 60% win ratio to 7 is already a good one. Actually, 55% is already anything above 50% is already a good ratio when it comes to trading in the market, as long as the risk reward ratio is positive. I'll discuss the risk and reward ratio later, but as long as those three elements are in, you can make sure that you will be making money in the long run. Now, the third element for the consistency is compounding the profits. This one is, I'm not sure if I would advise on it or I would advise against it, because it will depend on the trader himself. Because what this suggests is, what compounding your profit suggests is that any winnings that you get, you invest back into the trading. But I know, but for some of you wants to get into trading just so they can get the money out and spend it on yourself, which is not exactly a bad thing, because I have been guilty of such a thing myself. So it all boils down to whatever goal that you have. If you're going for an accumulation of capital, compound your winnings as often as you can, as you want. But if you prefer to live a better lifestyle, if that's your goal as a trader, then withdraw whatever money that you want. So that's my suggestion with regards to number 2, which is go for consistency. Number 3. So for this trader, they asked her what their tip was, and he said number 3 is no shortcuts and no excuses. They said there are no shortcuts if a person is really willing to do whatever it takes to make it happen. They can become the better trader of their dreams. That's what I'm shooting for. Why not? There's no excuse not to become a great trader. So many free websites like Baby Pips have become excellent educational threads for traders to take advantage of. So this one is probably a fundamental idea that is working for everyone, and I this is more about thinking of it in a thinking of trading as a long term perspective. You always have to put in mind that what you see in the advertisements or what you see uh, in the social media accounts, that whatever you see, that the earning potential, that the amounts of money, um, that is probably by year estimate 5 or year 10 in the trading business. And usually people lose out or finish out the trade or run out of the trading business within 1 to 2 years. They give up already. So um, that's why you always have to think of it as a um, long-term game plan for yourself. So there's a lot of strategies in the market. There's a lot of potential in the market, but you have to be able to produce one on your own, because each and individual trader is different and in him or herself, and you want to have your own way of trading in the market. Like when I showed you the GBP, for example, earlier, uh you could have done something different. So if I showed you this one and the market moved that way, I would have probably went the same way that I went and sold the market. But some of you who are contrarians to the market actually prefer going against the market conditions because you make money and that's your strategy. So again, it depends on your strategy as a trader. It depends on your strategy as a as a as a person, on how you like to trade, on how you like to do things. So it depends on those things entirely. So that's the main idea for number 3. No shortcuts and no excuses. Number 4. Okay, this one I've mentioned more than a few times already in past live streams, and I'm pretty sure that this has been mentioned a few times already by a few of my former of my colleagues as well, which is proper risk management is the key. So recognize that learning a trading setup is not the end of the road. It is just the very start. You must learn how to manage that position with proper risk, with a clear target, and with the trust that your trade is very successful for success. So, risk management is probably one of the most basic and one of the most important things that you have to learn as a starting player in the market, especially in the CFD forex market, where the markets are a lot of volatility. Although there's not as volatile as crypto, but it's still a lot more volatile than compared to the stock market or the other securities markets that's out there. So, what risk management ideas should we focus on? Remember that capital preservation is the number one rule when it comes to trading. So the more money you are able to make, the bigger the trades, the bigger moves you can do in the market, it allows you for more flexibility. However, even if you lose a bit of your capital, make sure that you do not get into that tight, edgy place where you're scared of getting into the market. Remember that emotional control is also part of one of the things and one of the most important things what we've discussed with regards to the probably one of the most core principles. As I discussed in a few live streams before, emotional control is part of the personal growth you want to get from trading continuously in the market. You also have to monitor your position sizing. So there are positions that you are confident with. You might want to put in a position that has a 2x, let's say 2x lots or 3x lots, depending on how confident you are. Usually, personally, when I see a gap in the market, that's when I put in a 2x or 3x lottage, depending on the capital that you have. Again, because if you have a lot of capital, maybe 10x is your safe zone to bet. But again, it depends on per trader and depends on per market that you have. You also have to have make sure that you also know your risk tolerance. So for those people who are confident enough to trade 100% of their capital, that they're willing to trade 100% of their capital, um, that's a lot more risk tolerance than somebody who can only trade in like 50% of their capital. So, oh, that reminds me that one of the strategies that a mentor told me was like, instead of putting 100% of your capital into one account, you can allocate, for example, one account is for this strategy, 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 and one account is for this strategy. However many accounts that you wish to have, and then make sure that you follow and then conduct training data on all of it, and then you'll find something that will work. Maybe some of them will work, maybe only one of them will work. But if you allocate one strategy for each one, and then you will see which strategies works for you, which strategy doesn't work, which strategy can happen if you will make money if you reverse that strategy, which strategy will work if you counter that strategy. Maybe the strategy works for this time frame instead of that time frame. Maybe this is more of a long-term strategy, more of an investor style strategy. Maybe this strategy works for a day trading strategy or a scalping strategy. It depends on the type of strategy that you're thinking about. So one of the risk management ideas that he always pointed out was try to point at opening multiple accounts for different strategies, and then once you're confident, make a main account that has let's say majority of the money that you have, majority of the capital that you have, and then use that strategy on that, using your position sizing to increase the income potential of that account. So that's it for number 4, proper risk management. And we are almost halfway already. Right. Hope everyone is learning as much as I am. I know I read this already, but sometimes you get ideas just by sharing it to other people, which I am. Thank you guys. All right, tip number 5 from one of the traders says, simple, know thyself. My one piece of advice I have for newbie traders is to find out who you are as a trader. There's no quicker path to losses and frustration than to trade who you are not. Discover who you are as a trader and trade you. Okay. Alright. This one I kinda agree with, but not really. Because as a new trader, you don't know yet what you want, what you like, and what you don't like, since you are just new in the market. You're still experimenting. But I agree with this sentiment that as soon as you understand your style of trading, your way of trading, you you have to stick to who you are and stick to your guns, as they say. Um, I know thyself seems like a Eastern thinking of being present and being on top of things of yourself, but it actually applies to the market as well. So it allows you for knowing yourself allows you to have a lot of emotional self-awareness, as they say, because since you are aware with your type of, let's say you're not a risk you're a risk averse person, you don't like taking a lot of risks, so maybe you just want to do a lot of short trades, a lot of minor trades. So let's see, if you see a market, for example, if you see a market go this way, maybe you don't want to trade this type of market because this type of market isn't something that you're interested in. Maybe you want to trade in this type of area where the trades are just going up and down just a slow bit, just not maybe you're that type of trader. Or maybe you are somebody like this, let's say in USD CAD. You'll find that this pair is the type of pair that you like to keep trading with. Or maybe you're the type of trader who likes to think of trading more of a long-term perspective. You don't want to check the market every single day. So you might want to look at the market from a yearly perspective. So it changes your view of what's happening in the market. So so if you look at it from a daily perspective, there's a lot of small movements. But if you look at it from a longer point of view, there's a huge, bigger movement. So that's by knowing yourself, you get to understand the type of trader that you want to become. So it also aligns with your strengths and weaknesses. So for some people, let's say you're a morning person and you do your best work in the morning. So you might want to schedule your trades in the morning. For those who are night owls and who prefer doing their work when the sun is down and people are sleeping, and you want to be in the market during that time, maybe that will work. That would apply to you as well. So it helps you maximize your strengths and minimizes your weaknesses as well. And this allows you for a mentality of continuous improvement. So since you're deeply aware of what your strengths and weaknesses are, you can make sure that you can cover some of your weaknesses and keep on improving your strengths. So as long as you continue doing the trading, as long as you continue moving into the market and applying your ideas in the market, you can still take advantage of every single opportunity. So that's it for number 5, know thyself. And we just finished halfway. Interesting. Number 6 tip is plan your trade and trade your plan. Probably one of the first quotes that I heard when I started getting into the market a while. It's been years ago. It says, plan your trades well before they happen, meaning it should have an entry, stop loss, and take profit. Make sure you stick to your plan through thick and thin, meaning, of course, win or lose, stick to the plan. Without knowing these 3 key elements, there would be no guarantee of success. Of course, you could be lucky a few times, but if you want to stay in this business for the long haul, I would strongly advise learning these points before entering a trade. All of the above means do not enter a trade on impulse or based on your hunch, gut feeling that it will go your way. All right, there's a few elements with what he said, but like I said, plan your trade and trade your plan is probably one of the first and probably is the phrase that every single trader hears within their first year, if not their first month into the business, because it just guarantees good fundamental ideas. So having like having the idea or having thought process of uh, of trading for yourself and trading your ideas and making it work for you will have your strategy fixed into getting into making more money into the market. So to make your plans, eventually you want to have your own trading system, right? Because a trading system is a more of a dynamic thing that works in whatever situation the market is in. And having a plan is more of a short-term goal. So having multiple plans that works will help you eventually develop it into a trading system. So having that, making sure that you have a plan all the time and trading those plans and sticking to them is how you will able to eventually make up a system. Because I can't tell you how many times that when I was starting, that when I traded into the market and let's say I already fixed my stop loss at a certain point and I fixed my take profit at a certain point, but then I see the market turning around and going to a negative direction. I'm losing hundreds of dollars already. Deep inside of you, you want to get out of the market because that's money you're losing already. You can see the money ticking 100 from 100 to 120, then becomes 150, 180. You'll see yourself losing some money already, and then you want to get out of the market. So that's or sometimes your take profit is around 500 pips, but then you see your market already at the 100 or 200 dollar marks, but sometimes you want to get out already and you can't wait for the full market movement for it to reach the 500 pips that'll make you around $500. So negative things that will happen if you get out of that system or if you get out of that trade already. Number one, you might make money, you will lose money if you're but the problem is you won't be able to collect that data because that data is corrupted, because you didn't fulfill the entire plan. You had the plan, you finished, you set it up, you positioned yourself, but you didn't finish the entire plan. So that data cannot be used, and that data cannot help you improve as a trader in the long run. So even if you lose a trade, but as long as it's part of a plan, trust me that it will help you out in the longer run, in the bigger picture, because sticking to a specific plan helps you build your system faster. So, and with the specific plan that you have, you're able to since you have a specific idea of where you went wrong or what you did wrong, you'll have more ideas how to adjust it in the future. So, and that is number Six, which is trade your plan and plan your trade. Hope everyone is getting advice or getting something out of what I'm sharing with you today. All right. Next one, number 7. Uh, ah, Number 7 is very simple. Its advice is start small. So, according to this trader, my advice to newbies, keep it small. Too many newbies started way too much money. I say keep account sizes small while you learn. Alright. Yeah, some of my friends are dropping by the area, so trying to help out. Okay, so starting small, like he said, like the trader said, keeping it small is thank you. Keeping things small helps you in the long run. Remember, winning small trades or losing small trades is the same as is the same as winning big trades and losing bigger trades in the long run. So, what you do in a small trade is exactly the same thing you do in a big trade. So sometimes the risk management or the learning curve that you have, um, it's gonna take a while for you to become comfortable with the style of of the trading style that you have. So it will be more of a skill development for you until you become better, until you become uh, financially stable to be able to sustain such losses. So small trades will help you uh, practice your strategies. It also helps you out in the long run because it it applies, because I believe how you take in small things is how you also apply it to bigger things. So see how you react to small losses. See how you react to micro losses. Maybe those losses is and then you'll see your emotional reaction to how to certain things happen. So imagine it as an emotional workout for yourself. So you don't start off with huge weights, you start off with small weights, and then once you're comfortable with that amount of weights, you go for bigger weights, you go for heavier weights. So that's how starting small helps you out in the long run. Again, as we've always been saying, do not think of this as a get rich quick strategy. Think of it as a more of a lifestyle, uh, part of your daily routine or part of your weekly routine or just part of your general portfolio of having money in the market and being part of the market uh, in the long run. Because being part of the market as an alternative is always a good option to have. All right, number 8. Um, Leave room for error. Don't risk too much of your account at once. That's the fast lane to burning out. Risking less means gaining more experience and becoming more profitable. Experience with trading on a live account is no less important than acquiring knowledge of technical indicators, and no less important than knowing what moves the markets fundamentally. So giving yourself enough margin for error means that the margin call will be further away. This is something that I keep telling some of my clients before, and even now I keep mentioning it to them that if you're gonna be risking a lot or you'll be risking all of your money, might as well play in the casino because at least you'll get free beer or free food, or something, or some entertainment in the nearby, because trading is not gambling at all. It does have a lot of similar feelings, it does have a lot of similar uh, emotional triggers, but it is not the same. So leaving room for error allows for risk mitigation. So it gives you the idea that even if, because no trade is 100% correct, so even if you are, let's quote unquote, 100% sure of a trade, and you make sure that you always leave yourself room for error, that in case this doesn't happen, you position yourself that uh, a plan B, so to say, for um, such events. Also, by always leaving room for error, you are allowing yourself a safety net against black swans. Now, no one can prepare for black swan events, as everybody knows. So, as long as you are allowing yourself room for error, any unforeseen circumstances, you are able to catch yourself before it hits, or before something really bad happens to your account. So that's it for number 8. Always leave room for error. We are almost finished. Last two. Actually, last two and the surprise. All right. Number 9 is follow your system. Write out your trading system, whether in a Word document or Excel sheet. Write your rules, the requirements, goals, and details of your specific trades. Additionally, have this document open at all times. You need to have a plan and follow it consistently. I believe that having it in your face the whole time helps you not sneak into that different trade. So, as we discussed earlier, um, the trade your plan and plan your trade, it goes back to that. So, according to number 9, which is follow your system, having, once you are, actually, if you think about it, a lot of these tips go hand in hand together, like know thyself, plan your trade, and trade your plan, and then now follow your system. It all aligns together. So by writing out your trading system, writing out your style, your goal, the trading goal was not part of this discussion, but it was a discussion that we've had during our previous live streams. um, Feel free to check that out if you have the time. So having, choosing the right goal for you, choosing the right method, choosing the right style, the right requirements, it allows you to become more consistent with your trading plan, and it allows you to control your emotions, especially during that if we argue, if we uh, glitchy times that you want to get out of the market because you can't tolerate the risk anymore. Having your plan in front of you of what your idea is, what's good for the market, what's bad against the market. You might want to stick with your strategies a little bit more. It also eliminates impulsiveness, since you will be looking at your plan, and then every single time that you see a trade, does it follow the plan that I set out? Does this trade stick to this plan? If it doesn't, then for sure you're not gonna do it. Well, hopefully you're not gonna do it, because I know some of the people that have a tendency to break their own rules, which I hope they do not do for this specific trade. And lastly, hopefully, and this by following your own system, this allows you for long-term sustainability, because having a clear set plan and making everything data driven allows you to see things from a wider perspective, so you can see, this strategy doesn't work on this pair because blah 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 blah, because of the specific situation, or this strategy doesn't work for this pair because, or this strategy applies to this pair because they are correlated with the movements. Like, for, let's see, for example, let's check out Euro USD and GBP USD. If you look at it, they have a lot of similar movements with each other. So some strategies that you are allowed to copy from Euro USD might be applicable also to GBP USD, but might not be applicable to AUD USD. So again, having a plan, having a system, looking at other opportunities in the market, allows you to think ahead. So for example, USD JPY, maybe your strategy works with a day, maybe it works in a year, or a longer term of point of view. It depends on entirely on your trading style, trading technique. So having your own system and writing it down and making sure that your system is in front of you whenever you trade, so that you can always check, is the trade that I'm planning to do based on just a gut feel, or is it actually following a system? So that's number 9. Follow your system. And last one from the traders is easy enough. Number 10, respect the market. Never be afraid to admit you're wrong. As much as you think you know, the market always knows better. Always respect your risk and never compromise your defensive circuit breakers. They're here for a reason and designed to check you out of position if changing circumstances invalidate the trade. Alright, so last tip from the most experienced traders is always respect the market. My mentor always told me that the market is like the ocean. So there, you can sail on the ocean, you can surf on the ocean, but you always have to respect the vastness of the ocean, because no one person or no entity can take down the ocean on its own. So especially for us retail traders, we're just a small, tiny drop of sand in the ocean compared to the bigger whales or the bigger market movers in the CFD forex community market. So even if, again, we are 100% sure of our trades, we have to always be ready for its unpredictability, its liquidity, and the complexity of the market movements, and how one movement allows for the other, because of there's a whole interconnectivity with regards to the main market compared to the mid market, to the liquidity providers, before it reaches down to the brokers and reaches down to sub brokers, and sometimes before it reaches to the retail traders. So there's a lot of complexity that comes into the market, and there's a lot of unpredictability in the market. So we always have to stay humble, that even if you are on a winning streak, sometimes you feel every single trade that you do is you are the best trader in the world. You have to be humble because the market will eventually humble you. So try to stick again, always stick to the plan, and always, as of number 10, respect the market. So that's the top 10 trades. That's the top 10 from the most respected and experienced traders. But I will be remiss if I didn't share with you guys my own tip as well. So as a bonus, I'll share with you guys my personal tip for newbie traders. So number 11, for those viewers who are still with us. Number 11 for me personally, my tip would be have a short-term memory. Never dwell on past losses. There's always opportunity in the market. So one of the things that I had a hard time letting go of was losing trades, or especially trades that you were quote unquote 100% sure, but the market shifted against you. It took me a while to realize that you have to let them go, and that tomorrow will always be a new opportunity in the market. Sometimes better opportunities, sometimes less, but there will always be another opportunity on the market the next day. So as soon as you just as soon as you open that trade, and as soon as you put in your stop loss, and as soon as you open your take profit position, make sure that you let it go already. Just is like put it into God's hands, as they say, because it's outside of your control anyway. And losing sleep over a specific trade will not help you in the long run. It will it will uh, it will build up some bad habits for you. So you might not be able to sleep. You might have trouble eating. I'm not saying I had those. I'm not saying I didn't. So excuse me. So it avoids from analysis paralysis, because sometimes this trade has a specific idea already, has a good position already, but you see yourself, oh no, this is the exact same pattern as the ones that I lost before. Maybe this will happen again using the same trade. But who knows? Again, that might be a different situation compared to this situation, because the patterns may be different, but maybe the economical status of the countries that where you were trading are now in a different position. Maybe their interest rates have changed, maybe their GDPs have improved. Again, the complications of the market is too vast for you to maximize, or for you to pinpoint the exact position of where you went wrong or where you went right in any given trade. So that's the best advice I could give you. And another thing for having a short-term memory, it prevents you from being emotional and doing what I call a revenge trade. So there was a time when I lost money with this specific pair. So the next day I opened another position on that specific pair again, just so I can get back at that pair, because I lost money to that pair. Okay. That is a no-no when it comes to trading, because number one, you're using your emotions, and number two, it doesn't follow any strict plan whatsoever. So, having a short-term memory allows you to forget everything that happens in the past, clear your head, be present in the moment, be present on what the specific pattern that you're seeing in the market, and just be trading what is in front of you. So that's it for our top our top 10 tips for traders plus a bonus one from me. So let's do a quick recap for for everyone. So number one is don't give up. Number two, go for consistency. Number three, no shortcuts and no excuses. Four, proper risk management. Five is know thyself. Six, plan your trade and trade your plan. Seven, start small. Eight, leave room for error. Nine, follow your system. 10, respect the market. And number 11, have a short-term memory. Now, if you look at the entire list, you will see that number one, they're all interconnected in some way. So it means that even if so just by doing once, sometimes by just doing one of the tips, it allows you to connect or interact with other tips as well. And one of the other thing that you might notice is that tips are all basically just fundamentals. Nothing extraordinary, nothing out of this world, no secret agendas. It's like getting in shape. You can have all the secret diets, all the secret workouts, special workouts, whatever the new workout fad is, but there's always it always goes back to the basics of doing resistance training and eating proper diet. It goes the same with regards to trading. You can have all of these flashy ideas, but the most effective way to make money in the market is going to the fundamentals and making sure that you consistently do them, whether you are in the mood for it or not. So again, that's what the trading plan is for, and that's what all of the tips that we share with you here at Trading Star is for. So if you guys have anything to share, feel free to ask us. That's it for me today. Thank you and